Welcome to the Carry Trading Made Easy webinar by swaphunter.com, hosted by 4xCube. I am Christopher Smilas, Head of Sales and Training at swaphunter.com. Been a professional trader for over 10 years now. Started out trading for myself, did very well out of it. Of course, some mistakes or lessons, as I like to call them, were experienced along the way. And I'm sure some of you can relate to that. A very wise trading mentor of mine once told me, Chris, in the pursuit of knowledge, it will always cost you something, whether that be time or money. Turns out he was right. But today, it's only going to cost you 45 minutes of your personal time. So do take advantage of that. Over the years, I've done a lot of portfolio management, PAM, MAM account management, and also manage my own funds. So I understand very well the hard work it takes to successfully manage an extensive portfolio consistently. What I've learned over the years is that you need to be adaptable to today's market conditions. Highly unpredictable events that are going on around the world right now are creating higher and higher levels of volatility for unprecedented reasons. You need plan A, plan B, and plan C in order to navigate your way through these volatile times. So I've built a great team around me over the years, all of whom have expertise in different sectors of the financial markets. This makes it easy for me and my clients to remain well informed, diversified, and to have a balanced portfolio using multiple strategies with one core strategy that gives me an edge over the market. I am really very excited to be presenting this webinar so I can share with you the benefits of carry trading with the Swap Hunter indicator package. Okay, so that's enough about me. The way that the webinar tonight will be structured, we're going to do a sort of brief 15 minutes covering basic carry trading, the conventional ways of doing it. Then we'll move on to how we separate ourselves and how we're unique in the way that we use carry trading by hedging correlated assets. Now, then we'll discuss the market environment, geopolitics, the current events, so on and so forth, which in itself could be a 2-hour webinar. However, anyway, I'll be as quick as I can covering the current market sort of environment. We'll have a quick strategies overview on a theoretical sort of standpoint from that sort of view, and then we'll look at some past performance on some of our other accounts using the Swap Hunter indicator package. Then we'll cover, we'll go into a more practical, the theory side is not going to take long, 15 minutes maximum, and then sort of 30 minutes of practical sort of demonstrations showing you how to use our unique trading or carry trading strategies that set us apart from conventional carry traders. So we do have a few unique strategies. We've given them monikers or names or labels. We have hold the hedge, release the hedge, and a triple rollover. So I'm going to go into more detail about all of these strategies in the practical part of this webinar. At the end, we're going to give you, all of you listeners, the opportunity to ask myself any questions regarding, everything we're going to cover tonight, and any other questions you might have. Obviously, we'll cover some pricing packages for the software license for the software the Swap Hunter software license. A bit of a Q&A, open-ended Q&A session, and then any feedback would be much appreciated. So let's crack on. You will also be given, before I move on, you're going to be given a handout that's already sort of been uploaded onto the webinar platform, the webinar software platform that we're using. So if you can engage in the polls, you can use that function as much as you like as we go through the next sort of 45 minutes. Okay. Let's cover the theory. of carry trading, basic carry trading, conventional carry trading. What is carry trading? Carry trading, the absolute most simplistic way I can explain it to you is you buy a high interest currency and you buy it against, or you trade it against a low interest rate currency, okay? And your broker will pay you the difference. Okay, now this is nothing new. Many carry traders have been extremely successful over the years. Many investment houses, hedge funds, banks, institutional level investors use this strategy in order to kind of ensure, or at least sort of build up interest rates on their trades, so they're getting paid to hold a trade with a positive swap, because it's the most unlikely sort of outcome. Okay, now I'm going to go into more detail, more technicals. I'm just going to really go blitz through all of the theory behind carry trading. Generally, it's used alongside other strategies like scalping or long-term investments and whatnot. Okay, so you buy a high interest currency versus a low interest currency. Okay, so let's say, for instance, Bank of Japan. This is just an example. These aren't the current interest rates right now. They're probably quite close to this, but they're constantly moving given what's going on at the moment in the markets. So let's say we have Japanese yen against the Mexican peso, and Japan offering an interest rate, central banks, BOJ, Bank of Japan, offering 0.1% interest on your money to be held in a Japanese bank. That's their benchmark rate. And on the flip side of that, let's consider putting our money in a Mexican sort of bank account where the benchmark rate is 6.5%. Now, the idea of the carry trade and how to make money out of this interest rate differential is to buy the Mexican peso against the yen. Now, this means you're trading with the swap. You're trading with the interest rate. You're buying a high interest rate yielding currency and selling a low interest rate currency. Now, even though you're still getting 0.1, 6.5, the differential is calculated by our indicator very quickly, and it enables you to enter into trades that are going to generate positive swaps or interest rates on your positions, which will most certainly give you an edge over the market. Now, as I said, this is just an example. Okay, it's interesting right now with emerging market currencies, but we'll get into all of this a little bit later. Okay, so every day you're holding this position, yen, peso, and you're buying the peso and the Japanese yen. So let's say Japanese yen, Mexican peso, you're shorting it because you're buying the peso. Okay, every night your broker will pay the interest difference, which is called a swap. And this is the idea, the basic idea behind carry trading. This is how conventional traders use this strategy. But they're only trading one currency pair or one asset pair. They're trading yen against the peso, which is one pair, which is one asset, one instrument. Now, it works great as long as there's not too much volatility on the markets, and let's say Mexico in this instance, for this example, Mexico don't go through too much volatility or uncertainty or market destabilization. Like I said, you can see here, as long as things remain stable, a one-way carry trade can do very well for you. Turkish lira, Mexican peso, Singapore dollar, and Aussie dollar, Kiwi. Okay, but basically, what the idea behind it is that you're looking for steady returns from the high yielding, high interest rate currency that's available on the markets. Okay, so what kind of sets us apart and how we're trading with carries and swaps, and the way that the swap hunter indicator allows you to use this conventional, very old, very effective strategy, but with a slight not slight, actually an extremely unique approach. Okay, we allow you to hedge correlated assets or asset pairs, which by doing this, okay, so let's say we have Japanese yen, Mexican peso, then we have US dollar, GBP US dollar, and GBP Swiss franc. Okay, so we have these two trades running, both of which are producing positive swap or interest rates every day by the brokerage. Okay, so this is what's unique about the swap hunter. All right. Also, what's unique about the swap hunter is the measurement and the ability for us to measure the strength of the correlation between two asset pairs. So let's say the blue line here that you're looking at, for instance, is yen peso, and for example, the green line is pound US dollar, pound Swiss franc. Now let's just say the correlation we've measured is 92%. So we make it very easy for you to identify correlated asset pairs in order to hedge and protect yourself. Now, let's move on to the market environment, the most exciting part of, well, the past economic cycle. Generally, what happens in the financial markets, every 7 to 10 years, they call it the 7 to 10 year rule. Every 7 to 10 years, we expect a recession slash AKA correction. Okay, so when people hear the word recession, they get very scared, they get very worried, and they start looking for safe haven assets, different approaches to the markets. Now we are coming to the end of that economic cycle, that 7 to 10 year cycle from 2008, as you can see demonstrated in our little image there. So as some of you might know, some of the listeners here, some of the attendees I know, some of you I don't, you know that I've been predicting the demise of the markets and what is going on because of the trade war and how the trade war is going to affect global economics. Some of you may have seen some of my posts from a year or 2 years ago predicting this. So anyway, trade war is obviously causing a lot of problems, and now we're seeing it come through in manufacturing reports, CPI reports, and other data points. Okay, so Trump tweets as well. Very exciting. Trump tweets, trade war, growth slowdown. Is it caused, the economic growth slowdown, has that been caused by the trade war? Was it happening already before Trump came in, before he started waging war with the Chinese? Who knows? Okay, but it hasn't got any better ever since. So let's face it, the S&P 500 is still up 14% this year, and we, even though we're seeing it crash 5, 10, 15% in the past sort of week or two, Dow Jones, all of the major indices tanking, they're still up by 14%, the S&P 500 at least. But these Trump tweets and everything are just causing crazy volatility that people find very unpredictable. Now, yesterday, the biggest news of this month, biggest news of the week, yield inversion. Okay, the 2-year US Treasuries and the 10-year US Treasuries have become inverted. Now, this has been a warning, and this has been a potential outcome for the past several months. It happened yesterday. That means, okay, when yield inversions invert, they predict recession. It's been effective out of the past 9 recessions, the yield inversion and those curves inverting. They predict recession, upcoming recession within 20 to 22 months. Okay, so that's what we're looking at right now. This is the market environment we're trading in right now. Very unpredictable, very unstable, very volatile. So I'm going to move on to our strategies, unique strategies that swap hunter use. Okay, strategy 1, hold the hedge. This is for long-term traders, not day traders. This is for investors. This is for high net worth individuals. This is for people who are concerned about equity preservation. They're not so concerned about making a quick buck. They just know that having their money in the banks, not doing anything for them, depending on which country they're in. Now, if they're in Europe, they're getting 0% interest rates. If they're in America, they're getting about 1.75, 1.5 after the last cut. They're looking to cut more and more and more. Everybody else is going to follow. European Central Bank, Bank of Japan, Bank of England. If the Fed are cutting rates, then everybody else will be. So lots of high-level institutional level investors are looking at some other kind of vehicle to offer them a better return. So basically, the way the hold hedge strategy works here at Swap Hunter is we open hedged positions, correlated assets. Okay, we leave the trades open to accumulate net swaps. So every day they're accumulating swaps, interest rates, so on and so forth. Okay, on either side of the trade. So we have one asset pair on the left, one asset pair on the right. Let's say both asset pairs are generating positive swaps. So once, let me just backstep just 1 second. This strategy is for individuals who have patience, a lot of money to invest, and I will show you how this works. It's a passive type of investment. You don't have to be an active trader. This is for somebody who just wants slow and steady growth, okay, from generating swaps over a certain amount of time. Okay, so this is some past results we have on the hold the hedge strategy. Let's take a couple of seconds just to review it. I mean, it's a 500,000 euro account. We've generated nearly 7% in the past year. Now, I don't know which country you live in or which country you come from, but 7%, getting 7% from the bank is unheard of these days. It's unheard of. It's not possible. They're not going to offer you a vehicle. So this is how hold the hedge works. Slow, steady growth, high net worth individuals, patience, low risk. Now, second strategy. Strategy number 2, release the hedge. Release the hedge. Short to medium term sort of vehicle for more active traders. Okay. Medium to high net worth individuals, it can work for institutional level investors. All of our strategies can work for anybody, but I'm just making clear to you how we focus these strategies on particular demographics. So you open your hedge positions, close the positions that are in profit after, let's say, 2-3 days, 1 week. You bank the profit on the winning side, and then you let, at a good support or resistance level, you let the losing trade recover. Okay, so you've closed your profitable trades and you have some losing trades, and then you allow the losing positions to recover. Okay, so very, very simple, but it does take a bit of time and a bit more active approach. Okay, here are some results. Phenomenal results, I might add. In the past year, using this strategy, okay, yes, 108% return. 108% return in the past year. All right, but the drawdown, okay, I must focus your attention on the drawdown. Nearly 60% drawdown on this account. So this account did take some hits. However, from risking 60%, now you're up 100%. This is the type of investor that release the hedge strategy appeals to most. All right, but you can also see the interest, 1,217, so 1,200 has been earned in swaps. You see this interest, okay, interest here, profit. Okay, so let's move on. We're going to go over into the third unique strategy that we have and we deploy, teach our clients how to use. Every Wednesday, because the markets are closed on Saturday and Sunday, you're not getting paid any swaps, okay? The markets are closed. So every Wednesday at the rollover period between 11 o'clock in the evening and let's say 2 o'clock in the morning, GMT +2 sort of time period, there's what we call the rollover, okay? So this is for this is for the junkie, the adrenaline junkie, the thrill seeker, the guy who likes to scalp, the trader who likes to get in and out very quickly. However, the greatest thing about this strategy, and whatever strategy you use, you know, relative strength index, whatever, MACDs, whatever, this strategy will boost you and boost your equity and I'm going to go into this in way more info a little bit later. Okay, so you might see some spread widening when you open your position at 11 o'clock. Obviously, at midnight, we all know midnight GMT, the spreads widen across pretty much every single broker in the world because of what's happening with the swaps, because of what's happening between central banks. The Bank of England is selling $1 billion worth of pounds to buy $1 billion worth, £1 billion worth of Mexican pesos. Okay, in order to make the spread, the swap, the interest rate. That's what they do. That's why spreads widen. So that's what we're trying to capitalize on here. Okay, basically, you've made 3 days of swaps in about 2-3 hours. That's what we focus on the triple rollover. Very short-term trading. Right. So we're going to move into the more hands-on side of the webinar. So I'm going to open up MT4 in a moment. Just bear with me. And once again, all of the information I've just covered will be in the handouts that you can get from the go to the handout section on the webinar app. Okay, go to webinar app. All right, so as you can see now, I've opened up MetaTrader 4, $100,000 account. Now we're going to focus very much on hold the hedge strategy, our number one strategy, hold the hedge. Okay, and as I mentioned before I go on, does anybody have any questions whatsoever? Anything at all? Anything? Whilst I'm waiting for your questions, and please do, if I'm going too fast or if there's anything you don't understand, just pop a question on the chat and I will respond to it. Okay, so hold the hedge. Let's have a look. $100,000. This account is very new account. Okay, this was only opened and the first trades were executed on the 9th of August. All right. Okay, so what you can see here is Correlation Matrix Pro. What this is very simply for you. It's extremely user friendly, very easy to use. After a little bit of coaching and training from myself, you will find it extremely to use. It may look complicated, it may look like extremely complicated, but we will teach you how to use it properly. Okay, so what it does, it measures the strength of the correlation, or displays the strength of the correlation here in the middle column here on the left hand side. Now I must reiterate or iterate that on the left hand side these are positively correlated assets. You see, now the way that I can demonstrate that is by doing this. Okay, so positively correlated. They're doing the same thing. Yes, we've got GBP CAD and GBP CHF all doing the same thing, pretty much following each other. Even this gap was precise, almost, well, to 96.5% accuracy, and that's what we're giving you here. So we have on the right hand side inversely correlated asset pairs. So this one's going down, this one's going up. All right, and we also have the net swap you're going to get paid every night for opening these trades, labeled and displayed in the net swap column here. So it's also color coded to make it easier. You've got strong greens, strong reds for negative, and strong greens for very positive or very high values, and strong red for, the complete opposite. So we've made it as user-friendly as possible. So that's what the Correlation Matrix Pro does. It displays and matches currency asset pairs that you can hedge, either with a positive correlation or inverse correlation. Okay, so let's move on to what we call the Swap Hunter correlation. Okay, this is an indicator that measures 0 is in the middle, +1 is very, very positively correlated, -1 very, very negatively correlated, and the strength of it. Okay, that's what the correlation indicator from the Swap Hunter package demonstrates, shows you, and visualizes. So we can see that here. Okay. And it's really, I mean, it's not easy to calculate precisely the correlation or the strength of correlation based over certain time periods, which we have over 60 days or 100 days. But like I said, +1 very strong, -1 very, very negative correlation, or sort of positive or inverse correlations. Okay, then we have what we call what we've labeled the Swap Hunter Pro level. Okay, so the Pro level, you can see here these red lines, okay, which very much display, as you can see, resistance. It matches up with your sort of EMAs here, and this gives you an idea of where to enter, where to exit your trades. All right, so you've got you can customize them by percentages, 1%, 0.5%, etc., etc. All right, so basically, apart from that, as you can see, we have moving averages, industry standard, exponential moving averages, 200, 150, 20-day moving averages for fast identification of trends and entry-level direction. And then, as you can see on the right-hand side of the two currency charts here, we have what we call the Swap Hunter profile, which is a volume indicator showing you. Let me just sort of zoom in a little bit here. As you can see how this works, very high levels of volume here, okay, in order for people to sense that this is a strong price level. It's either going to break out to the top side, to the upside, or it's either going to pause here, which it has done for weeks on end, paused here, broke down to the bottom here, broke down to the bottom here, and again ended up here, a very high profile level, very high volume level. Everybody's looking to sell and get into bonds, buy the dollar against the pound. Okay, so that's how you use the volume profile. Again, in the handouts and on our websites and in our private tutorial sessions, we will be able to train you how to use these indicators. So if any of this looks like Chinese or hieroglyphics to you, please do ask us any questions in the chat. And if I'm going too fast, please let me know. So there are other indicators within the package, but I'm not going to go into them. We can do that at a later stage, maybe during a different webinar, or we can include some information in the handouts, or any sort of customized or personalized information you need. We can most certainly email you or organize a call. So anyway, that is our sort of indicators. Some of the indicators within the package we covered. Okay. So let's go back to our trading positions. Okay, now I've explained how the Swap Hunter works on a very basic level. How we differentiate ourselves is extremely obvious. A conventional carry trader, and I must reiterate this because this is where we stand out from everybody else. Everybody knows about carry trading. I must reiterate, it is not new. It's been going on for decades. The way that we figured out to get an edge over the market is to use the correlated asset pairs, to hedge, to protect our equity and earn swaps. Look at the swaps we have here on all these trades. These trades have only been running since the 14th of August. That's yesterday. Okay, and we have $10 here just in swaps. Okay, and the trade's P&L, who cares? Really, we do care. Everybody cares about profit and loss. But with 4xCube, the reason why we're hosting this show with them and in association with them is because the trading environment that they provide our clients and myself and is second to none. Instant execution. Just extremely great customer service, and I'll go into all of the benefits of being with 4xCube, at the end. Okay, the swaps are very high, spreads are extremely tight. I'll go into all the benefits at the end. Okay, so we've basically covered the hold the hedge strategy. Okay, now it's just to summarize, very low maintenance. It's for high level institutional level investors who don't want to spend all day on the computer analyzing the markets. Okay, they just want to set up positions and generate interest, you know, on their trades that beats the bank and beats inflation, so on and so forth. Very passive, high level, high net worth individuals. Okay, let's move on to the next strategy. I'm going to log into a different account here. Alrighty. So this is all about release the hedge, this account, okay? 50,000, slightly less, slightly lower level of investment. However, let me show you how this works. Now you might say, hang on, how can you be doing better with 50,000 than you're doing with 100,000? I'll tell you why. Okay, so we set up a trade exactly the same way as we do with hold the hedge. Okay, let's take okay, GBP CHF and GBP USD. Okay, this is the trade that we entered. Now you can see I entered the GBP USD. We hedged these two asset pairs at these prices. Okay, so I started selling the GBP USD. This is the account history to show you proof that this trade has been executed. I sold the GBP USD at 21.16, okay, 1.21167 or 1.2116. All right. Now 1.2116 on the GBP USD. Let's go into it a little bit. 121.16. Let's have a look at that price. Let's see. All right, so pretty much where we are right now. Okay, 21.16. All the pound has been doing over the past, well, few months is declining. Ever since Brexit is becoming more and more and more of a threat, and the hard Brexit is becoming more and more of a threat. So obviously, it's not just about interest rates, but it's also based on those geopolitics, that there is going to be a hard Brexit. It's the most unlikely trade to win. To start buying the pound with Brexit on the horizon, it's not the most likely outcome for you to buy the pound now before October the 31st, when we have the final decision on Brexit, whether it's going to be hard, soft, whatever it's going to be, with a backstop, without a backstop. It's not a likely trade to start buying the pound now. So what we do is we sell the pound and we make swaps, okay, on the pound, but we're selling it, which is going against the market. Everybody wants to buy the pound because it's at 2-year lows. It's at the same level it was when Brexit was announced. So what we do is we just really we focus more on collecting swaps and interest rates on our hedged positions. We don't concern ourselves too much, and we don't lose sleep over our positions because we're hedged, and that's what makes us unique. That's what makes the Swap Hunter indicator unique. We're hedging the pound against the US dollar and the Swiss franc. Okay, so one's going up, one's going down because we're buying one and we're selling the other. All right, so once the sell trade came into a profit, I said, I'm going to close at 120.70. Okay, but now, and it was a good decision because the current price right now on GBP USD is 121.12. So I made myself around 100 pips, let's say. 100 odd pips, you know, on this short side of the trade, or hedged trade. And now I'm waiting for the GBP CHF because it was losing, but now it's recovering. As you can see, the pound came down to 121. I let go of the hedge. I've put a sell stop here just in case I'm wrong. Now, if the pound does continue to decrease, I'm protected here with this sell stop. This is what this trade is. This is not an active trade. This is a sell stop. With this strategy, we do recommend using buy stops, sell stops in order to protect yourself even further in case you're wrong and the timing of the releasing of the hedge is wrong. But for me, this looked like a really good time to release the hedge here, and so far it's looking good, and the GBP CHF has recovered. That was in a minus when I closed this positive trade on the cable. So anyway, that's how release the hedge works. Now, it can be used in conjunction with scalping, with reversal trading, with mean reversion, with many multiple strategies, many strategies that other traders use every day. But to have this running in the background, these types of trades where you're making interest every single day on your trades, it's a buffer, it's an insurance premium on your trades. It's like me, to paraphrase a very recent movie, it's like me standing in front of a burning house and offering you fire insurance on it. Okay, so this is what the Swap Hunter does for individuals, institutions that we deal with, IBs, affiliates, so on and so forth. Okay. Thirdly, I don't have a particular account to show you how we use our third and probably the most exciting, or one of the most exciting, or let's say adrenaline fueled strategies that we have, is called the triple rollover Wednesday. All right. Now this really excites me because as long as I've traded over the years, and I like slow and steady approaches towards the markets, I also sometimes I like a bit of action. So on a Wednesday night, I will have a look at the markets. I will have a look at the pro level indicator, or have a look at support and resistance levels, and I will say, right, okay, let's have a look at the positively correlated assets on the Matrix Pro. Let's have a look at the inversely correlated assets on the Matrix Pro, and let's go for a quick sort of 5-hour trade or scalp on a Wednesday night, just Wednesday night, where they pay the triple rollover. All right, so 3 times the rollover. So let's take this for instance. Let's have a look at a very high paying. Okay, so this euro against the Canadian dollar. Okay, to swap short. So to swap sell, you're getting 389 to sell euro CAD. On the other side, you've got gold, and to swap short or to sell on this side, sell gold, you're getting $5.24 per night on every lot. Now, because they're inversely correlated, you're going to sell one and sell the other. Okay. Remember that, please. On inverted correlated assets, sell and sell, or buy and buy. On the left-hand side, it's positively buy, sell, sell, buy. Okay, let's go back. Right hand, inversely correlated assets, you're selling and selling, or buying and buying. And this net swap differential, and obviously the swap long, swap short columns help you identify this. Anyway, so every night on Euro CAD and gold, to hold this trade, okay, you're going to be earning $9.13 every night. But on Wednesday, you're going to be earning $27.39 just to open the trade on a Wednesday. For 5 hours, you open the trade on a Wednesday. Now, okay, the floating profit and loss on these two trades, the Euro CAD might go down more than than gold goes up, and you might be left with a profit and loss floating P&L, a negative floating P&L. However, you've just made $33, $34 in the matter of a few minutes. Okay, in the matter it takes from the market to go from midnight to midnight and 1 second, you've made that money. Okay, the reason why we tell people when using the triple rollover strategy, the Swap Hunter triple rollover Wednesday strategy, the reason we tell them to get your trades in a few hours before the rollover, so say quarter to let's say 10 o'clock GMT until 2 o'clock, 3 o'clock in the morning GMT, because there will be some spread widening because of all the other carry traders on an institutional level and the banks and everything. That's why you get spread widening at the rollover at midnight GMT on any trading platform and on the markets in general. So it's for the very active, very highly experienced traders, the triple rollover Wednesday. It's higher risk, shorter term returns, and let's face it, I mean, it's time effective. You only have to trade once a week for 4 hours, this is worked out very well for a lot of our clients and for myself as well. I do enjoy that strategy. And as I've mentioned throughout the webinar, this is not the holy grail of trading. This is not what we're selling here. This is not what we're presenting here. This is not something that is going to, you put money into and you just become rich in 1 year. Okay, now this is a tool that will help you to achieve that goal, to help you to achieve your financial independence and to become a more successful trader. To have the Swap Hunter package in your arsenal of trading tools, it just allows you more security, less stress because you're hedged, less risk because you're hedged, and just it's an extremely effective and powerful tool. So what I'm going to do, I'm going to go into I hope I haven't been too confusing. I hope I've been helpful, but that was the the sort of overall with the strategy. So and as I said, it'll be covered in the sort of the handouts that we're giving out on the GoToWebinar. So in terms of pricing, let's get down to business. So what we have usually with the Swap Hunter, it is it's a piece of software. It's an indicator package, and we sell the software licensing in order for you to be able to install it on your MetaTrader 4 account. So we have a few different packages with some assorted benefits. So obviously, because 4xCube are hosting this webinar, and in association with Swap Hunter, what we've done is we've come up with some offers. So standard monthly subscription. So you're paying monthly. Usually, we're charging $120 per month. We have a summer special till the end of August. $83. You get your standard package there. Okay, then that would be a monthly subscription for sort of 1 month. Now you're also going to get a personal training session with myself to run you through everything we've gone through in the webinar, but in much more detail. I'll be holding your hand metaphorically, guiding you through the markets on your trading account, or if you decide to open a trading account with 4xCube, we can go through that account with you and get you set up and get everything up and running and get you generating interest on your trading account and trading equity. So summer special $83. If you open an account with 4xCube, we're going to go and offer you the monthly subscription at only $59 per month. Okay, so bear that in mind. We have professional package as well. This is an annual subscription. You're going to save 50% compared to monthly subscriptions of thereabouts of, let's say, paying for the standard every month. Okay, so you're also getting a personal 30-minute session with myself as well as part of this package. And the summer special, okay, like I said, usually $699 for this package. Summer special, it's around 30-40% off, $419 only. That's for the year. And if you go in and open and register an account, a trading account with 4xCube, we're going to give you the whole package and everything aforementioned for only $349. Okay, so and any other questions, obviously direct them into the chat. All of these, what we're looking at now is obviously link to use to get an account open at 4xCube, then we have you know, the 4xCube account, and in order to here's a link to swaphunter.com in order to go to the pricing page directly in order to have a look at what we're offering. So basically that pretty much covers everything I wanted to mention. There's so much more, everybody who's out there listening, that I could go into in terms of inverted yield curves, why it's necessary to have a hedge strategy in place, why the swap hunter will help you, how it's going to help you. I hope I've covered it in as much detail as I possibly could have. I hope I haven't confused too many of the newbies out there, but I do know that there are a couple of experienced guys who know me very well, and I know them very well, who are there, who know about swap trading, but have never seen anything like this.